Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Thursday, January 4th, 2024. It is 10:38 a.m. Eastern Time. I'm starting the video and wanted to get one out quickly to you. Well, I'll tell you why. Well, just to show you what's going on here. So this morning, got a post off to you. Apple hit that target. Yesterday, I said we were in no man's land, which means we were smack between support and resistance. But then I highlighted a good support level that I figured Apple would bounce and be an objective long. And I just want to add that I think it goes without saying. I didn't add it in that post, but just in case, if Apple bounces, the market bounces. Almost certainly, or most likely. Not always. I have seen cases where Apple goes against the grain, but again, what I'm going to do in this video, I'll keep it relatively quickly, rifle through the Mag 7, because if you have Apple at support, but then all the others are breaking support at that time, or have just broken support, well, Apple probably will break that support. However, if you have 3 or 4 or 5 of the Mag 7 stocks at support or very close to it when Apple is at support, then there's a very, very good chance the buyers are going to step in there. So what does all this mean? Well, QQQ and NQ are just shy of that second target that I maintained. But however, and QQQ is even below where yesterday I said a reasonable stop would be. But based on the fact that Apple and some other things I'm going to show you are at support, I think there's a good chance for a bounce. I also want to add, I'm going to go over this chart here. We're going to start here, then I'll roll into Apple, roll into a couple of the Mag 7, and the Euro. There's a few things I want to get to and show you here. Unfortunately, I did this on a busy board, meaning if I turn off all the annotations, then the lines go away. But here's what I want to show you. Focus on the oversold readings. This is what I got out to you today. I gave you these purple circles. I did these in yellow because they were very, very close. If you look closely, you'll see the RSI got almost to the 30 level. The blue line's at 30. That means oversold. And it works well on Apple. Some securities go deeper than that before they're really oversold, but Apple 30 does the trick. And even these were, again, very near levels, and they were also in a cluster in close proximity, but they did the trick. So what I'm going to do is turn off all the lines just to show you what happened each and every time, even in a bear market. Apple was in a bear market, right? It fell from the 2021 highs, late 2021 highs, to the January 2023 lows. That's where Apple was my favorite stock right there in the beginning of the year, along with the market and everything else. 32% drop. So by just about every metric out there, that's a bear market, right? And even then, well, here's what I wanted to show you. And you can see the circles, but so let's go back before then. This is what happened. If so basically, do you want to short Apple at these oversold readings, or do you want to be long Apple? And I'm just going to say this. I know there's, recently with the whole FOMO trade and the strong rally into year end, I can see the comments on the side. I can listen to the TV, and everybody's bullish. Here's what I want to say. For the life of me, if you're not buying Apple right now after a 10% drop into the first oversold reading in a while, I don't get it. If you believe the market's going higher in 2024, this to me is probably the best opportunity you've seen in a while. Because again, go back in history. There's a oversold reading, and again, it doesn't look like a lot, but it was a double-digit bounce there. You hit it again there, again double-digit bounce, hit it again there. Again, I'm assuming these are double digits. I'm not measuring these. So those were all the near levels. They didn't get all the way down to oversold. That one, you had a hell of a rip rally right there, which I remember we were long and with impunity got out right at the top. Got short again, the markets and or Apple. I can't remember if it was both, but definitely QQQ. Okay, so there was a full-blown oversold reading. You went a hair lower if you look at it, bring the arrow up, but it wouldn't have exceeded any reasonable stop if you were going for a bounce trade, even back to the 200 days. All right, so you get the point, guys. There's no guarantees. In a bear market, you're going to get disappointed. You're going to buy one oversold reading, and it's going to get much more deeply oversold or stay oversold for an extended period of time. Here's an example right here. Here's a good one. And this was, in a bull trend. I'm a little to the left of it, but you were oversold, I guess, on that drop right there. And, it went a little bit lower for about a week or so, and you had a little bit deeper. It stayed oversold, and then you had a rally. Let me just measure it. Again, at the very minimum, all of these were tradable bounces. That shows me if I grab the bottom of the candle, which I did there, 10.48, so 10.5%. So again, that little blip was a double-digit rally. Swing traders will take a 10% bounce in a week all day long. That's what swing trading is all about. You do that, what do you do it? 5 times a year, you have 50% on your money right there. Again, if it's not always so easy, but that's the point of swing trading. Get these little micro squiggles. That's what this, big part of what this site's all about is try to swing these trends, these little smaller trends. All right, so that's it. Let's not beat a dead horse, but say that if you are one of those folks that believe that we're going to see a good year, or at least a positive year in 2024, with Apple having dropped recently down to this level of 9.4%, almost 10% drop, coming up in the 200-day moving averages. Again, one of the best ops I've seen in a while based on that one indicator. And then go back to what I showed you in the video yesterday. That was, I had it here on the daily at about 180, 150, that support level. And then here was a 181.34. And I do want to say that, there's plenty of support below. You can see all these lines that I have. Each of these are support lines. And there's another support level, pretty decent. There's gaps and reaction highs and quite a bit. They're a little bit lower. So in fact, it's about 1% lower. Let me show you why that's relevant. So here's the way I look at it. I gave you a minimum bounce target up here to 187. You could it was the arrows that I showed you there, and that would be if you take Apple. Again, that's a minimum target. That's about a 3.25% bounce. 1% stop loss, or allow a little over 1% would give you a nice 3-to-1 RR. And if we do drop 1%, a couple things that it would mean. Apple would, for the first time in a while, have visited its 200-day. There's don't know if you can see it in the video. You should. If your monitor's not, if you're looking on a phone or something, you might not see it. There's a blue line right there. That's the 200-day exponential moving average. And then the red line just below it, the 200-day. The blue is a simple. The red's a 200-day exponential. And they tend to act as support resistance. We punched through them there, but they didn't get me. We went long there because Apple hit my purple support level, key support level, and then recovered it. And most of the other key stocks hit their 200s and bounced. So it's usually a level where the buyers on tech stocks, especially in the Nasdaq 100 and those top components, they behave, is what I like to say, very well off the 200s, meaning when in a bull trend, pullbacks to the 200s often produce a reaction or keep the trend going. And then likewise in a bear trend, you want a short rallies back into the 200s. So I just spent a lot of time talking about one stock, but it's not everything. We're going to get to QQQ, and then I'll just rifle through the rest of the Mag 7 and show you a couple other things. We'll get the video out to you. Okay, so this is QQQ. Sell signal is still very much intact. I still very much believe we're going lower. If you recall, over the holidays, it was right here. It was one of these Tuesdays. I guess it was that one. I said, that we were grinding higher. It was the holidays, and said, be a reasonable stop. But then I came in before we even got there and said, look, I'm going to suspend it. There's just too much evidence in the charts that I'm seeing that says a turn's coming, and the breakdown looked inevitable. I mean, it was, again, one of the most beautiful shorting ops that I've seen in a long time. Doesn't matter to me if I was bearish here, looking for a short on that wedge. It doesn't matter. I could be wrong 5 times in a row. It's not going to change the setup. The day I stop taking these textbook looking short setups, especially factoring in sentiment and everything else, is a day I should just hang it up. So that was a beautiful short entry. We get the first sell signal right there on the break of the minor trend line, hit the first target, bounced right up there. And again, that's why I suspended. It gave us a marginal new and still very much divergent high. And then here we have one of the biggest drops in at least in weeks or months. Nothing much, 4% so far. So I want to do the video. So I have, so T2 is down here. So we haven't hit T2 yet. But yet I'm long. Why? Because of Apple hitting support. If Apple bounces, most likely the market bounces. But again, I'm going to get to the other things in a second. So I still think we get there. But if my Apple trade plays out, which was a 3 point something percent bounce, we'll probably have a bounce on QQQ. Maybe, maybe not. And I'll get to that in a second and do something like that, right? 406. And I think that's the target I gave you yesterday for the bounce trade. The other thing is, look, it's only from where I got that post out today, 1%. That's 0.95 if you look at the pop-up box on the left. So less than 1% down to that very good support level. So I think the RR right now, even though we're not there yet, to cover that short and go long for bounce trade for active traders is favorable, because if you reverse cover, if you are long now and you went long yesterday, you're talking 1% downside before a very high probability of at least a tradable bounce, in my opinion. So it's not much more downside. And so that's where I wanted to go with Apple. So Apple could do that other 1% or so down to the 200s before we have a meaningful bounce. There's also, as I just showed you on Apple on the 60-minute chart, there's additional support just below. So why try to hold out for that extra percent? It's just not worth it, in my opinion. Because of that. Now, it's not just about Apple. It's a lot about Apple, but there's the Apple 60-minute chart. Here's Microsoft. Remember, I covered these Mag 7 in the video yesterday, and Microsoft's still at uptrend line support. We put in a divergent high right there, and we've been walking lower, but we're in this range. So, and just below that, you have price support, and that's what on the daily, we're actually below this trend line. So we had this kind of fits in. Hopefully it makes sense to you guys. So zooming out to the daily charts, we had some pretty good sell signals that I think are just getting going. And I think the top is in, most likely. Again, you got to see if Apple is going to rally up to, new highs with that oversold reading. I don't think so. There's a lot of evidence in the charts that tell me it will not see new highs. But that's my thoughts now. Either way, so this is intermediate to longer term bearish, this breakdown here on Microsoft. But you do have, for the very near term, some support right there about, again, from, I'll just do it from where we're at right now. About 1.5% and maybe 2% below. But there you can see the way I have this trend line drawn on the 60-minute chart, we're pretty much right on support. And then if we break it, it's not that far, again, about 1.8% down to that 364 level. So there's another one at support. Apple at support. This is a kind of common theme I'm doing here. Apple at support, the largest by far, biggest component of the Nasdaq 100. The second largest, Microsoft at support. The third largest, Alphabet. This is a 60-minute chart. Remember, we're just coming off a divergent high, so I still maintain more downside. However, in the near term, we could bounce. This is kind of a sloppy-ish chart. I know we back tested, as I covered in the video yesterday, this downtrend line. We have all these reactions here, and that was a breakout and a back test. So if you want to look at it glass half full as an optimist, you say there's a breakout above this downtrend line and a successful backtest. Now, if we can pop this minor downtrend line, we could go up. Now, again, it fits into my longer term outlook, maybe some near term upside, but any new equal or new high is almost, at this point, if it happens soon, it's guaranteed to still be a divergent high. It will simply extend the divergence that's been building. That's the 60-minute chart. There it is on the daily. You can see it nice and clean. Let me squish this down, squish these guys down, focus on price a little. So that's it. It's this big old divergent high here, just like the one we had back in late 2021 that gave us a big drop. I think it'll play out. I think it'll get us down here. And then my purple lines, once they go, that's kind of the all-in moment. But, we can do that first, or we can just crap out here. At this point in time, volatility has been rising. VIX has been moving up, so and we've recently had some pretty powerful sell signals I gave you, and started on Friday. So I'm cautiously on the long side. I'm driving with one foot on the gas, one on the brake. And I'll say this: if it's confusing, You just want my opinion. That's all I'm giving you is my opinion. You do what you want. If you're not an active trader and you are short based on those recent sell signals, I think it makes sense to ride out any counter trend bounces and set your stops wherever. Again, your stops are going to be dependent on two variables, really. Number one, what your price target is. If you're a long-term swing trader and you agree with me that this market's going to drop 40-50% over the next year to two, maybe even more, yeah, you can certainly give yourself a 10-15% stop loss over where we're at now. Again, that's if you shorted here. You can use a tighter stop as well. It's up to you. Again, the other thing is your risk tolerance. Some people don't have that kind of risk tolerance. So, again, that's what stops are based on is some people like to keep stops tighter, keep losses small. Others like to use a more liberal stop. Over the years, my stops have gotten more liberal and my trading's improved on it because I get stopped out of less trades. I'm, more often right on the calls, sometimes wrong, sometimes dead wrong. But when I'm right and I'm early and the market makers run up and they know where the stops are, so I find that placing a little more liberal stops, using a less favorable risk reward ratio, often works out better for me in the long run. So, every now and then, causes you a little more pain when those stops are hit. But that's my thought process. So there it is. There's Alphabet. Here's a uptrend line that we're probably going to come to, and it could take a while. Here's how these things work. I'm going to drag this out, extend that trend line, and show you. This is my purple kind of all-in line down here, the one that we hit right at the lows. Again, and the 200-day, you can see beautiful tag of the dual support. I highlighted at the time. We were long and strong there, off that low, covering shorts. And when we get there, if and when we get there, that's going to be a major sell signal. Break that. And look, here's the thing. Here's another trend line we'll probably hit. It could be, we could do this first. Go up here, do something like that, and then get down there later on when these lines intersect. I have to keep dragging this. I don't know. Again, this is kind of long-term stuff right now. I'm just giving you today, tomorrow, next week stuff. So back to what I was doing so I can get the video out to you. There's Alphabet at kind of meh support, I'll call it. It's not great, it's not bad, but Amazon, if you recall yesterday's video, I highlighted this trading range here, the bottom of which is at 143.56 ish. We pretty effectively hit that, close enough. Maybe another jog down, that's all it would be. Again, it's good support. And just like Apple, you can see a big old gap that it probably wants to be backfilled at minimum if this bounce holds. But again, bigger picture, we're just coming off that big divergent high. This right here is really not commensurate. It's possible that's all we get and we rip to new highs and beyond. But usually a divergence this large results in something like this, like it did last time, right? There you can see the big divergence, and that drop on Amazon, even in a bull trend, was still a correction of almost 20%. So this little, it's decent. It's the biggest drop in months, about 7% so far. And like I said, this is where the dip buyers probably going to step in. And by the way, took the markets down pre-market. Again, watch the economic calendar. I always recommend it. Today was ADP and a jobs report, dual jobs numbers, and they were strong, very strong. And so, see, I'm watching the euro. I'm going to get to that in 1 second. And I saw the sell-off, and normally they would, oh man, here we're going to go lower and hit and we knee jerk in the morning. But guess what? So what it was is they're saying the economy right now is stronger than expected. Employment came in much hotter than expected. Strong jobs numbers. And so, but the market threw a hissy fit at first, thinking, oh no, that's going to not give us our March rate cut, or the Fed might not give us the 6 cuts that we've priced in. And so the stock market sold off. But watch that euro. That's what I told you before. Watch the euro. The euro was going up this morning. It's going up today. It's up right now. And so when you saw the stock market down this morning, when Apple hit that support and the euro wasn't tanking, meaning the dollar was going down, so the euro was going up. Why'd the dollar go down? It's a good question, but it doesn't matter. You would think that the dollar would actually go up, but it didn't. And that's the thing. The charts are playing out. So I'll get to the euro in 1 second. Amazon at support, bottom line. So again, why I remain intermediate term bearish. I think we get a little kick up there, 149. Got at least one subscriber looking to get back into some XLK puts they just covered. And, that would be certainly an objective level to short Amazon if we get that bounce. And again, we may jog down one more time today to shake out any longs that bought this dip. But there's a lot of support here. Now, look, these support levels, everything I'm talking about right now, Apple, and I give you a 1% range, from where we hit today on the lows, down another 1%. We start smashing through there, something else is going on. And you may want to get out of Dodge on your longs and get back into those shorts. I know I would. All right, a couple more. Let me just look at the daily. Oh, yeah, there it is. There's a previous reaction high right here. Take that line over, and that's exactly where Amazon is now. So all this was a breakout. And again, I know there's, everyone had, not everybody, but some of you out there listen to my voice. I know from the comments, and then others just I know from how crowd mentality works. A lot of FOMO going on, fear of missing out, and they've been marching out all the bull brigade on CNBC and everything else lately, saying 2024 is going to be a great year. And you want to buy, this is when you buy. Again, you buy simple. Again, it's a busy chart, but you see a breakout to new all-time highs. And if you didn't buy the breakout, then you can buy the backtest. Now, not me. Well, yes, now, but not Amazon. I'm sorry. But longer term, no, I'm not buying it. Why? Because that breakout to all-time highs came on a divergent high with overbought readings, which gives it a much higher failure rate, in my opinion. Right now, it has not failed. It's simply backtesting, and I'd be surprised if they don't buy the backtest. So it's another reason, there's that little gap. All right, spending a lot of time here, but again, this is what I look at now. Again, NVIDIA, it's like so many has just broken down, and those are longer term, more important intermediate term sell signals on such a long-term trend line break like that, right? But we could see a little kickback rally. Everyone loves this one. It's crowd favorite. And if they step in and buy Apple, then that starts pulling the indexes up, and it could pull some of these up, and maybe you get a back test on NVIDIA. So I'm just showing you objective levels. Maybe you never look back again. Maybe this stock will crap out today, or maybe Apple will rally and this one won't. Again, I look at all of these collectively, not just, I don't trade them individually, but that would be a nice scenario, or even a marginal any new high anytime soon will be a marginal new high. Then I want to see 449.50 break, then my purple levels, and then that's where the market starts to snowball down, in my opinion, when my purple lines are taken out. All right, Meta at support. I mean, look at that. That's a long-term trend line right there. Very long-term off the November 2022 lows. Quite a few, especially a lot of recent reactions. It's a big, giant bearish rising wedge, which I put very good odds is going to break. And we'll hit my targets. T1's the purple line. That's the kind of the all-in moment. This is just a big, massive, toppy looking trading range to me. And, any break to the downside, especially, solid sustained break, it's going to have much longer term implications. And those won't be potential anymore. In fact, I can scratch the word potential now. So T2, T3, T4, T5. And then I turn to the weekly charts, and I'll probably give you longer term, deeper targets if and when those are hit. All right, enough on the FANGs. Did I cover them all? Tesla. Oh, Tesla's got some, it's actually not bad support. Here you go. Gap, reaction low, broke it, back tested it several times. So I see plenty of, that's why I had a line there, 241.28, and that's about where we are right now. So there's another one at support. Ultimately, I think that support goes. It could go sooner than later, but again, we'll see. And I have no desire to game Tesla. The charts are not as clear to me as, like I said, Apple I like, but we'll see if it pans out. Okay, let's look at the currencies real quick. I mentioned that before. So here's Euro. This is where, remember, yesterday we hit. It's a pointed out we had positive divergence. This is E7 Euro futures. We went up, had a little jog back, but all we did is back test this downtrend line. So you had a breakout of back test, and the euro is positive. I also show you often EUR USD, the euro US dollar pair. And so this was it. And so it doesn't matter that the jobs number came in hot, which would indicate typically would indicate that the Fed might be less likely to cut rates, but it doesn't matter what the common logic or is to the market. What mattered is that the euro is positive today. That means the euro is up against the dollar. Maybe you're new to the site. I like to show it over and over and over. There's a super strong, unmistakable, and virtually immutable correlation between, this is QQQ, I just overlaid in purple. And so it's simple. The euro goes up. So this morning was a, like I said, when you had early in the morning, QQQ, you had turn on the pre-market trades, post-breed data. When you're down here, but yet the euro was not dropping like this, that says that's a disconnect. That's a buying opportunity there. Now the euro could have turned around and started tanking, and then the Qs probably would have kept going lower, but that wasn't the case. A little nervous traders in pre-market started selling off, and they weren't watching the forex pairs, the euro and the US dollar. Okay, let me turn that off. Okay, so where do we go from here? My best guess is, like I said, Apple and everything else bounces because the fangs are sport. Won't be a very large bounce. Probably about that same thing I said yesterday at 406.32, a little shy of there. Possibly if they get some momentum going, you could take out the gap. I made the case in the very beginning of the video that if you are more bullish than I am, and you think the market's going higher, and this is a great bond, and it may be, and it showed you Apple at a rarely oversold level on the RSI. Buy Apple and put a stop and let it go. Don't second guess everything. Don't listen to me. You know, if you get it, and I would again give it at least 1% to the downside. There's a little support below. We may do that. I think this is it. I think 406.32. In fact, I gave you even like sharpened my pencil on this 15-minute chart yesterday. And that's right now, that's most likely. And there's, you know what, there's one more level I need to add here. I see a couple reactions. This is minor support, so I'm going to color it down a bit to kind of indicate that for about 402.80, because I do see that reaction high, a couple reactions and their reaction low, but I still think at minimum this bounce will probably carry up there at about 404. And you know, quite possibly the bottom, there's that big old gap. Was that Tuesday's gap? And top of the gap. So that's minimum 404 and max, current bounce target 409. And remember, if we jog down, it's only about 1% downside to my T2 is hit, where it's very good support, and I would put good odds on a bounce. So you know, if you want to give it another 1%, you can stay long, try to game that, and it would just be a bigger bounce up from there if T2 is hit. Right there, 392, a little above 392. Okay, quick update. TLT trade has finally turned positive. I'm trying to remember where the official entry. I think it was in here somewhere. And that one I also told you, because the charts were overwhelmingly bearish, in the holiday drift, suspended stops on that. So, you know, at this point, you could certainly put those stops back in. Don't let it, shouldn't get over the highs. We already went on. We broke down below the trend line. TLT is my preferred shorting proxy, the official trade idea. Down 1.26% today. And it's also, I think it makes sense to stay short treasuries now because they've been highly correlated with the stock market. So it's what I call an indirect hedge. If the stock market does turn around and drop, let's say you're playing the long bounce, but the market drops down, TLT will most likely go down as well. So Right now, like I said, I'm kind of more in swing trade mode on the Treasury shorts, and it still haven't hit even my first target, so plenty of downside left. Just wanted to point that out. All right, I was going to show you another chart. I'm going to wrap this up. I'll do that in another video. Just long-term stuff. I pulled a chart, some interesting charts today on credit card debt and some different metrics there. But I'll cover that. That's kind of macro, longer-term stuff. It's not, time. This is the stuff I like to get out to you because this determines, where we're going to go today, tomorrow, and next week kind of stuff. Whereas I look at, economic charts, economic indicators and things like the macros, consumer debt and all that. That stuff can take, months, usually years to play out in many cases. So I'll get to that one later. All right, I'll wrap it up here, get the chart out to you, and if anything changes, if I think this bounce is going to fall shy of my minimum targets, I'll let you know. And again, nothing wrong. Those are, give you a minimum and a max, kind of current max target. One thing I like to do, depending if everything's looking good, sometimes is I'm approaching that minimum target instead of booking profits there. If I think there's a very good chance of a pullback, I will book profits and reverse it. But if I think there's a decent chance we may carry through, which is right now what I'm kind of thinking based on what I showed on Apple, then I just, as we get there, I put a really tighten stops up and give it the chance, probably get a reaction off that first target, but then we can punch through there and keep going, and then I let my profits run. And if we happen to hit the first minimum target and reverse and then dump, then I just gave back a hair of the profits on it by tightening stops out. So that's kind of how I trade. All right, guys, I'll wrap it up here. This has been Randy Finney with Right Side of the Chart. Have a great day.